Today's agenda is going to be about 5 optimal configurations to launch bots. So in previous webcasts, and the last one was about 3 weeks ago, so at that past webcast we discussed only 2 optimal configurations, but today I added 3 extra optimal configurations for you. So you can use these 5 optimal configurations already today on your automated trading algorithm. So this is going to be a step-by-step guideline regarding what are the configurations you should set depending on certain market formations that are spotted on the market. We will also discuss the exit strategies, of course, because we must understand when is this optimal time, market timing, to lock in profits or to minimize our losses. So we have at least 5, but we will discuss all of them today. So that's going to be 5 exit strategies exactly. And trade ideas from backtesting. We have this tool known as backtesting, and I guess quite many of you are already familiar with this instrument. But for newcomers, I will explain step by step what backtesting is all about and how to use it to find optimal cryptocurrencies to trade. We will also go through key metrics that we've developed at Bitsgap, which you should monitor and on which you should base your future projections and to validate your dynamic, to find if you should make some changes in your trading setups or not. Maybe you found your optimal configuration and finally achieved trading strategy diversification. So we have these metrics and I will explain how to use them. A trading up instrument for boosting. So if you want to follow a trend and you don't want to spend hours in front of the monitor, then this instrument is exactly what you need. And I will show you the exact cases where it is optimal to use the trading up and when, depending on your trading style, it might be not that optimal. All right, so we will cover these differences. And of course, the risk management in automation. So what are the basic principles which you can configure at Bitsgap and effectively launch bots in just 1 minute. So no waste of time. If there is a severe market action happening, if severe volatility and you don't have time to waste, then we have all these instruments available, and in just it will take even less than 1 minute to launch a bot according to current market conditions. So I will show you real-time examples. So let's begin with the quick refresh of what the artificial intelligence that we empowered at Bitsgap has enabled us to do. So first of all, we have a fully configured trading algorithm. So that's going to be useful information for newcomers, and a quick refresh for those who don't remember what is the trading mechanism that we apply in automated trading. So this mechanism is called grid trading. So that basically is a trading range which is defined by the upper and lower limit prices, which you set accordingly, or by using automatic Bitsgap recommendations, and I will show you this in 5 minutes. So on the upper side, you have the sell side. So this is the area where all of your sell limit orders are distributed accordingly. So your investments here are proportionately distributed. So as soon as the price reaches a certain sell order, then it's going to sell the base currency and you will get the profit in the quote currency in this case. And of course, below is the buy area. So these are your buy limit orders. And by that, trading range where you have both the sell side and buy side, you ensure that the algorithm automatically buys at the lower price and sells the base currency at a higher price. So that can be an everlasting process of the bot extracting profits from the market 24/7 on your behalf, as far as it stays within the trading range. So it is really important that the price stays between the boundaries, so it stays within the trading range. And that's why we have this feature known as the trading up instrument, which allows us to follow an uptrend 24/7, even if it establishes a new higher high. So with this, so you have the highest sell price, lowest buy price. In between you have other orders, and basically we call them grid levels. And here's the example. You see the market price reaches our sell limit order. So in this case, the algorithm will sell the base currency at that price. So that's exactly 11,500. And it will take a portion of this cash out from the market to set a new buy limit order. And by that, this is how we achieve an almost endless process of the bot buying low and selling high. And in this case, the difference is the net profit, which goes directly to your pocket. So that's the example. You see, we've generated 11,500, then we plotted a new buy limit order, which required 11,250. So in this case, the difference is exactly our bot profit, which goes directly to your balance. So that's a fully feasible and transparent metric, which you can see here. Oh, sorry, not the exact page, which you can find here. You see the bot profit. So all of the profit here is already in your balance. So that's the net profit. And most importantly, the fees are already paid. So we take this into account. You see, completed orders, fees, they are already calculated. So the profit here is net of all fees. It is already priced in. All right. And let's continue. Yeah, well, the high frequency execution is basically one of the biggest advantages of automated trading that we've developed at Bitsgap, is that the algorithm can trade, well, these are examples where I have 220 trades per day on average. So what I did is, you see, here's the total amount of trades executed by the bot. So that's 18,000 trades for the period of almost 3 months. All right, and that's exactly 220 trades per day. So that's what has the artificial intelligence and the automatic algorithm enabled us to achieve 24/7. And by that, we actually save a lot of our precious time. So once again, you don't have to waste your precious hours, your lifetime monitoring the market. You have the algorithm to execute trades on your behalf, and that's it. So that's basically all you need. Yeah, well, as already mentioned, consistent profit inflow. So the bot buys low and sells high, and by that it ensures a stable flow of profits. These can be tiny profits, but added up together, they make up a decent return in the long term in any case. So you see, I have some active bots here, and some have managed to make 60% to my initial investment. So that's the pure profit. It doesn't take into account the volatility of the base currency, because if we take how the value of the base currency has changed, then we have to look at the investment change. And in this case, the investment change is less. It's 39%, because it turns out that land at some point of when the bot was trading, it has diminished in value. So that's why we have investment change lower than the bot profit. So in any case, you see that in the long-term perspective, you see that's the period of 83 days. It's 60% to our already initial investment. All right. So that's almost 20% per each month in the bot profit. It doesn't mean that for each cryptocurrency it's going to be the same. No, because it depends on the trading configurations that you've set, and of course the volatility of the cryptocurrency. So let's move on. So you see, yeah, the bot profit already demonstrated. Backtested strategies. So that's something really important. This instrument allows us to backtest. You see that's the word consisting of two parts. Back, which means the past, and test is basically to see how would have this strategy performed if we would have launched it back at some point of time in the past. So for instance, you see that's basic attention token trading to USDT, and you see that for the period of 30 days, and you see the date range is the 21st of May until the 20th of June. If you would launch the bot at that time, at the 21st of May, then you would have generated 15%. All right, so you can backtest any cryptocurrency available on any cryptocurrency exchange linked to Bitsgap. And at Bitsgap, we have all of the top cryptocurrencies in terms of liquidity. So here they are, all right. And you can always change, add a new one if you go to My Exchanges. So here you can see what are the exchanges, and notice that I'm currently on the demo mode, and that means that I'm using my virtual money to trade with, and that actually allows me to test strategies absolutely risk-free. So that's, in my opinion, maybe the biggest pros of the advantage of Bitsgap is that you can test and find your optimal, discover your trading strategy before risking any real money. All right, so it fully mimics current market. All right, so the price here in the demo mode is exactly the same as the price if you will switch to your real account. So that's absolutely the same. So now let's move to the platform, and I will show you how to launch bot in the advanced mode. And we will also go through the difference between the bots that we have at Bitsgap. That's the scalper and the classic bot. So, but first of all, I have to mention that we are currently holding a competition, which is a 10K USDT OKEX bonus giveaway. So if you are a newcomer at OKEX exchange, then you can participate in this competition, and you can actually win the prize up to $100. So basically that's an ordinary trading, but if you trade on OKEX and you are a newcomer, then you just get this extra bonus. All right, nothing changes for you, you just trade, but you get the bonus. All right, so that's a plus game for you in this case. And here's the information. We also have this information in the knowledge base, in the blog, and in the email forwarding. So if you are a user at Bitsgap, you receive this message, so you can find all information there, and as well as here. So yeah. And now let's go through the trading algorithm. We will launch our first bot, which you can actually apply at OKEX as well. So since I've mentioned OKEX competition, then let's use OKEX exchange in this case. So you see, here you have this strategy, and you can select either the SBot and the Classic bot. So the difference between the two is that the SBot has a different investment distribution mathematical logic comparing with the Classic bot. And here's how. So in case of the Classic bot, what you will find out is that it plots, it buys the same amount of the base currency, and here it is. And actually, let me use the laser pointer. See, that's the amount of the base currency that the algorithm is going to buy as soon as the market reaches a price level, which is indicated in the right corner over here. So notice that it has an equal, so that's the parity here in terms of amount. But if you multiply the amount by the price, you will find that in this case, the investment value per each level is going to be different, all right? So it can be that if the price is lower, then of course the investment spent will be less. Whereas with the higher price, the investment is going to be bigger. But when it comes to the SBot, what you will find out is that the amount of the base currency that the algorithm is going to buy varies depending on the price. And by that, it ensures an equal investment distribution per each level. So you see, it takes the amount, and if you multiply it by the price at which it is going to buy this amount, then you see 28.56 USDT will be spent. And same with another level. So it makes adjustments accordingly so that it achieves an equal investment distribution for each level. So once again, when it comes to the Classic bot, you see there is an equal distribution in the amount, whereas in the SBot, the equal distribution is achieved in the investment value per each level. In some cases, depending on market conditions, and of course we cannot with 100% predict the future outcome, so we don't know at the time of launching the bot which strategy will bring more or less returns for you. But at least here we understand that in case of the Classic bot, you actually have the possibility that the algorithm will spend a bit more than the investment you allocated to it, and if the price will then eventually go higher, then you will get more returns comparing with the SBot in this case. The built-in algorithm of SBot, it almost by 100% ensures that the bot will not take extra money from your balance. You see, here's the investment allocation. So that's the value of your investment, all right, which you allocated to the bot. But in some cases, due to the technical specifications of cryptocurrencies of your selection, it can be that it can take a bit more of that from your balance available just to ensure a proper trading. But it's almost a very rare case, and it is most cases affected by the extreme market volatility. So yeah, basically the difference is in the way that bots distribute investments, and in general they have the same security mechanisms to ensure proper trading. So once you've selected the strategy, and let's apply the SBot, which is a brand new strategy which derived from the Classic bot, we've selected the OKEX exchange, and now is the time to select the cryptocurrency pair. So here you can actually use it. the section here, so you can type in the cryptocurrency you are interested in, let's say Cardano. So here you go. But if you don't know which cryptocurrency pair you want to trade, so below, if you scroll down, you will find section known as strategies, and here is the list of recommended strategies. So so that means that these are the cryptocurrency pairs that during the period of last month demonstrated biggest return in the bot profit. All right. So if you change the period, let's say, to a weekly basis, then you will find out that the list of cryptocurrencies will be automatically refreshed accordingly. So it turns out that on a weekly basis, during the last week, CTC trading to Bitcoin was the top performer. And if you click on it, you will find that that's basically because of the severe volatility. You see how the chart looks like. It looks like crazy, and that's why the bot would have managed to ultra scalp the market. You see, here is a bunch of ultra scalp opportunities. Yeah. So that's not the solid chart in terms of market efficiency, but for scalping, and actually the SBot strategy is a perfect one for scalping, especially if you had up to 180 grid levels distributed within the trading range. So that's a perfect market action happening here. So this would have provided the bot with a bunch of opportunities to extract profits from the market, and that's why that's exactly 48% just for the period of 1 week. So once you've selected a cryptocurrency pair based on these recommendations, let's say I click on, let's change it to a 3 days period, and you see it turns out that PST is the top performer. So let's say I'm interested in this, as this coin has proven to be the most successful, and it may be that I'm still confident it will continue its performance. Maybe not the best one actually. Because I don't know the PST coin, so I don't actually stick to coins that I am not familiar with. So maybe icon trading to Bitcoin. Let's see. All right, you see, that's what I call a perfect sideways market with extreme pumps and dumps. But still, you see, it stays within the sideways formation. So here's the market configuration, trading range configuration for this type of market formation. Can be like that. And yeah, so you see that as I clicked on icon, it has automatically set the trading range for me. And I can actually adjust this trading range manually by dragging the line on the chart. So I can drag the upper limit price higher, and I can drag the lower limit price lower. And by that, I manipulate the trading range. You see, if I have a narrow buy side and a wider sell side, that means that in order to launch this bot, I must have more of the base currency at the time of launching the bot than the quote currency. Because you see, according to this trading configuration, I have more sell limit orders than buy limit orders. And that is why, in order to plot all of these sell limit orders, we must have enough of the base currency. And here's the exact amount that is required for this configuration. All right. So you see, it requires 8,000 icons and 0.13 bitcoins. So out of this total investment, it is clear that we have around 60, I think 70% of the base currency and 30% of the quote currency required. But what's going to happen if I change the trading range? Then you see, let's make a wider buy zone. You will find that now I have I must possess more of the quote currency, and that's almost 70%, and fewer of the base currency. So that's the way you manipulate the trading range. Of course, now you can actually change the lower price and upper price over here, but I would strongly recommend you, especially if there is a severe volatility currently on the market, then basically it can be the case that you don't have enough time to spend on this manual typing of the numbers. Then instead use these lines on a chart to set your upper and lower limit prices. Now is the very interesting part. It is the grid quantity. So what you have to understand is that, once again, a grid level is just a limit order, all right? So the more orders you have, and it can be up to 180, depending on the cryptocurrency exchange. In some cases, that can be up to 200. So the more grid levels you want, the more investment is required, all right? So let's say I want to, actually I have icon trading to Bitcoin at OKEx already. So maybe we should use another one, because you see, if I have already launched the bot, then I'm not able to launch another one on the same cryptocurrency. So let's switch to GTO, trading to Bitcoin, and let's make sure that on the balance we have enough of the Bitcoins. Yeah, well, clearly we have enough. And let's say that I'm okay with this configuration. Let's just make maybe 120 grid levels. And maybe 80. And let's use only 0.1 Bitcoins. So what you will find is that in order to launch this bot with 80 grid levels and the total investment of 0.1 Bitcoins, you will find that you cannot place 80 grids into this price range to start the bot. So that means you can adjust the grid quantity to make sure that the bot is able to launch the algorithm with the same investment value. So you see, it turns out that on this cryptocurrency pair, you are able to launch only 23 grid levels with the total investment of 0.1 Bitcoins. So maybe let's use another example. Let's maybe switch to Binance Exchange. Let's check the balance. You see, I have some Bitcoins. Okay, in this case, let's trade with Bitcoins. Maybe EOS trading to Bitcoin. So you see, 79 grid levels, total investment, and the exact value of this total investment in terms of USD is over here. So that's 1,360 USD. So if I click on start, it will automatically launch the bot. But what if I want to change the grid quantity, let's say to 180? Well, you see, still possible. So it turns out that the value is enough to launch that amount of grid levels. Let's maybe switch to, let's say if I want to reduce the value. I guess it's lagging a bit. Let's actually refresh the page, because it seems like it is making some miscalculations. So yeah, once again, well, let it be BNB trading to Bitcoin. Let's set 50 grid levels. Let's use 0.09. So here we go. Let's not use the training app. I will explain this later. Start the bot. So as soon as you click on start the bot, it will automatically tell you that in order to launch it, you must have enough of the base currency, in this case BNB. So if you don't have it on your balance, the system automatically recommends it to buy with a market buy order. So if you don't have enough time on manually buying the required amount of BNB, then you just stick to this plan, click on yes, and what you will find is that the system automatically buys the required amount of the BNB. It assigns a required amount of the quote currency, and here we go. You see BNB trading to Bitcoin with the total investment, and you see if you click on view, here's the exact investment distribution. So right now, for this trading configuration, you have 16.3 BNBs in sell orders and 0.04 Bitcoins in buy orders. So that's it. That's how you launch bots at Bitsgap. Alright, so it only basically requires you to select cryptocurrency pair you want to trade, define the trading range depending on current market formations, and I will provide you with 5 optimal configurations depending on these market formations, the grid quantity, and the investment. And so that's it. Alright, if you forgot to apply some of the instruments over here, then don't worry. If you click on view, then later you can still switch them on. But that's the topic that we will discuss in 10 minutes. Let's stick to the plan and move on with other presentation. So now about the metrics, investment change versus the bot profit. So these are basically two crucial metrics with which you must be familiar to see your dynamic. So here's the example of lend trading to Bitcoin with the investment of 0.11 Bitcoins. So that's the initial value. That's the money you put into this bot. And you say that the investment change so far is 54%. All right. So that's the value change. This value change consists of, the investment change consists of the value change. And under the value change, I mean that how the value of the base currency has changed, because you see we are trading land, and that means on a secondly basis. All right, the price is constantly changing, and that means that at some point of time the value of land can be lower, and at some point of time can be higher. So that's why the value change affects our investment change in general. And the investment change also consists of the bot profit. All right. So it is the value change of how the base currency has performed and the profit generated by the bot. And that's it. Basically, you multiply the investment value by the investment change, and you get the current investment value. And here it is. And by making the simple calculations, you will find the exact profit generated, taking into account the value change and the bot profit. So that's the pure profit in this case. So you see the bot profit is 0.066 Bitcoins, whereas the final net profit is lower. That's because in this example, the value of land has diminished, and that's why it has a bit lowered our profits, and the offset value is 0.061. All right. But it can be the case that the market is moving upwards, and what you will find is that the investment change value is higher than the bot profit. So when you see that the bot profit is bigger than the investment change, that means that the value of your base currency has diminished. All right. And if the investment change is bigger than the bot profit, then most likely it means that the value of the base currency has appreciated significantly. So now, finally, 5 optimal configurations to launch bots. So now you've learned how to launch bots, what is the trading range, and how the grid strategy works. Now is the time to find these perfect market conditions to execute our automated bots. And the first one, that's the channel app scenario, which you can spot on a rising market. And here it is. So the idea of this pattern is that the price is moving within the support and resistance lines, which are angled up, and the channel app pattern shows a clearly defined uptrend and describes the behavior of the price contained between upward sloping parallel lines. So higher highs and higher lows, so these are the higher highs and these are the higher lows, characterize this price pattern. All right, and you see that's the exact visualization of this pattern directly from the book. And you see that the idea here is that the price is moving between these boundaries. It bounces off the support level and reverts from the resistance, and you can take advantage of this scenario. And here's the perfect market timing over here. You see, as soon as the price bounces off the support level, and that acts like a certain confirmation for us as traders, investors, that the support line has sustained. So that means that it will most likely, as it has successfully bounced off the support level, that it will continue the upside momentum at least up to the resistance line. So here's the configuration of your trading range for this concrete market formation. You have a narrow buy side and a wider sell zone. Because you expect this rally up to the resistance, that's the rise potential represented here by the sell side. Whereas you still should plot a buy zone here, because it can be that even though the price has bounced off the support level, it can be that it will revert back a bit and then will once again retest the support to bounce off successfully and go higher to test the resistance line. So here's the buy zone in case it will fluctuate within this area a bit and then will go higher. And you don't want to skip this market momentum. That's why you have this optimal configuration. And the stop loss to in case if the pattern does not sustain, in case if the market price breaches the support line, you have the stop loss to minimize your losses, all right? Because even though if you have spotted this perfect pattern on the market and the trend in general is moving upwards, it doesn't mean that each time you spot this pattern it will be successful, all right? It can be that the support line will not sustain and your stop loss will be triggered. And that's why you should always have it to have a fully under control risk management. So that's the basic principle. Use stop loss each time you are trading with automated algorithms. And you see, here's the exact moment where we launched the bot and it went upwards, retest, downwards, and you see retest again. So even if you would have launched the bot with a trailing up feature, then it would not only take profits according to this trading setup, but it would move with the market rally accordingly. And in 5 minutes, well actually in 10 minutes, I will show you how to use trailing up to maximize your profits even more. So yeah. Another one is an angled up support. That's a very simple one. So what I found out is that in the vast majority of the top 20 cryptocurrencies in terms of liquidity trading in the cryptocurrency world, so that's the BNB, that's FIDA, that's Bitcoin, Ethereum. So these are the coins that really respect the support line. All right, and here is the perfect visualization of how the price bounces off the support line each time it approaches to it. So in this case, the configuration can be like this. So once you see a successful bounce of the support line, you apply the same logic as we applied with the channel up pattern. And you see how perfectly it moves higher, establishes new higher highs over here, over here, over here, establishes new lower lows, exactly aligned with the support line. So use this market logic to find optimal price to enter the market. And that's actually BNB trading to USDT. So you can actually check these configurations like me. You see, I've just plotted these configurations to find out what would be the potential return. All right, so you can actually backtest it using technical analysis, same like I did here, or you can just visually observe that the market has sustained in the support line. So the third one is a triangle symmetrical top pattern. So it is formed when the price of a cryptocurrency fails to retest a high or low, and ultimately it forms two narrowing trend lines. And in this case, the price is expected to move up or down past the triangle depending on which line is broken first. So the price movement inside the triangle should fill the shape with some uniformity without leaving large blank areas. And basically this pattern is commonly associated with directionless market, since the contraction, well, in other words, narrowing of the market range signals that neither bulls nor bears are in control. But the trick here is that you want to find this pattern on a confirmed rising trend. So if you see that, if you zoom out the chart and you use a 4-hour or one day time frame, so you zoom out and you take the range, let's say, of 5 months, 4 months, and you see that the trend is moving upwards. So on this rising strong market, if you find these patterns, then most likely the price will eventually breach the resistance line, not the support line. And that's the perfect example. It's taken in August, you see, in mid-August. I think that was actually Bitcoin trading. No, sorry, that was, well, actually I don't remember exactly which cryptocurrency that is. But still, you see, the idea here is that you are looking for a breakout, and as soon as you see a breakout and it happened over here, you can enter this algorithm. So you can execute the algorithm with this trading configuration. So below is the support line, so you can have your buy side adjusted to the support line. So you plot your stop loss below the support in this case, and you have a wider sell zone because you see that in general the market is moving upwards, and here it is, and that's exactly what you've been looking for. And that's why to extract profits from the market you have a wider sell side. So you see that in all of these configurations you have a very limited risk. All right, the risk here is very small because these are strategies that I found for you just because I find them lucrative in terms of profit to potential loss. So the Sharpe ratio is the term used in the financial world here is very high because the potential return exceeds significantly the potential risk. You see, the potential risk here is only below the support line, so the distance is narrow, and the return potential is almost endless, especially if you have the trading up feature on. What you are actually looking for to fully maximize your returns, and with Bitsgap automated bots, these are the sideways market and rising market. And as we continue with the angled up support line and with the triangle symmetrical top, the idea is that the bot generates profits each time it spots opportunities to buy low and sell high. And you see, here comes the exact visualization of this algorithm. So when the price moves lower, the algorithm buys, and as soon as it goes higher, it sells. And that's how it extracts profits from the market. And notice that that's the rising market in general. So BNB is appreciating in value to Ethereum. So not only we extract profits generated by the bot, but we are also affected by the positive value change of BNB as its value is appreciating. So that's what I call an active investment change, because it is the value change, appreciation of BNB, and the bot profit generated. So that's what you are looking for. You are looking for a rising market to enter. And on the sideways market, you see that's the formation that you can also spot. Same logic applies as with the channel up pattern. You see that the resistance line here is represented by these two higher highs and horizontal resistance in this case, and horizontal support line. Each time the price approaches the support line, it bounces off, and up from the resistance it reverts, and that's the exact pattern. It's known as channel, and that's the trading configuration which you can apply. So if you see that the price is somewhere in between the resistance and the support line, then you can have a 50-50 split. All right, so you expect that this sideways market will continue, so you basically let the bot to execute profits during this sideways market. And if you spot this market pattern on a rising market, like over here, you see, so most likely the price will breach the resistance line, and you will get even more returns. So you are not only making profits within this sideways formation, but once the price breaches the support, the rally continues, the value of your base currency appreciates, and in this case you achieve a bigger investment change in general. So that's what you are looking for. Here's the exact idea of trading on the sideways market, because in other words, sideways market is a period of stagnation. It is basically a period when the price stays somewhere in between, in the neutral zone. So it's kind of moving upwards, but then almost instantly reverts and goes lower. So it's kind of delta zero game over here. But with automation, you can actually make this zero-sum game a positive one. So you can actually make profits while the rest traders that just, let's assume you just bought the BNB somewhere in the middle. All right. So by that time over here, you would be in the zero profit zone. All right. And over here, you would be in a negative zone. Whereas when it comes to automation significantly outstrips, it outperforms the simple hodl strategy. And that's here is the perfect visualization of this effect. So you see I have this hodl over here pointing to this price. So imagine that you just buy, in this case that's Bitcoin Cash. Imagine you just buy Bitcoin Cash over here at that price, at that point of time, and of course you then later expect that the price will move higher and you will make some decent returns. And what turns out is that yes, it really moved upwards, but only up to that point you would make only 5%. If you would just manually trade and simply hodl Bitcoin Cash. But when it comes to automation, you see, with automation you would have generated 14%, and that's almost by 3 times more than simple hodl strategy. That's because during this period you see all of these circles on the chart. So these, you see, green circles, they represent buy orders executed by the bot, and of course red circles, they represent sell orders accordingly executed by the bot. And during this period, as the market was a bit moving upwards, it used this severe volatility to execute trades and to extract profits, seizing all of these volatility opportunities. And that's why the bot profit is priced in the investment change, and that's why investment change significantly outstrips the ordinary hodl strategy. So automation on the sideways is 100% guarantee that it will outperform a simple hodl strategy. So you are looking for sideways formations because on sideways market, automation works the best. So now is the time to actually discuss the trading up instrument that I've mentioned already a couple of times. So the idea of the trailing up instrument is that it follows the market rally. You see, here's the trailing range defined by the upper limit and lower limit prices, and now you see the price moved upwards. It now has established a new higher high. So what's going to happen when you have a trailing up instrument on? Then the trading range will follow the market rally accordingly. All right. So what happens if market price establishes a new higher high, like over here? Then in this case, the trading range will follow again. So you see, remember at the start we had our upper limit price over here, right exactly where the lower limit price is now, and now the upper limit price is right here. So that's because of the trailing up instrument. But what happens if the price breaches the lower limit? In other words, the market is now trading outside of the trading range, below. So in this case, the trading range will not follow the market fall, because that's why it's called trailing up, because it goes only up. All right. But as soon as the price returns back to the trading range, you see, the price is now exactly within the trading range. That's where the bot will continue trading. So here, the yellow line represents the area where the market breached the lower limit, and that is the area where the bot wouldn't have managed to trade on our behalf. But as soon as the price stays within the trading range, the bot will continue trading. If it then eventually establishes a new higher high, then of course the trading range will be moved accordingly. So that's the idea of trading up. Here's the example of NG trading to Bitcoin. That's my real trade. You see I have trailing up instrument on, and because I had it on at the time of launch, initially my trading range was defined by these two yellow lines. And as soon as the price breached the upper limit price, you see it started to trade higher, and the bot has successfully followed the market rally. And now my trading range is right here. All right. That's the benefit of a trading up. I don't have to constantly monitor the market, and I don't have to be always awake to wait for these moments of when the price breaches the upper limit price. When I have my trailing up instrument on, the system automatically changes. The trading range will be automatically readjusted, and it will follow the market rally. And in case if you don't have a trailing up instrument on, this is what can happen. You see the price breached the resistance line, it moved higher of the upper limit price, so now the market is outside of the trading range, and as we don't have our trailing up instrument on, that's why we got stuck over here. Alright, so all of the investment remainings are here, represented by limit orders. So on this rise, the system has managed to successfully execute all of the sell limit orders, but it was not able to plot new buy limit orders and higher sell limit orders because our trading range got stuck over here. With a trailing up instrument on, you would have generated profits even here. So basically, without this instrument, you would have generated a lower return. So now let's move on, and here's the effect of how the bot profit offsets the negative value change. So that's basically an advantage of the trading algorithm itself, because it is constantly executing trades regardless of the market trend. The bot will make profits on the rising, on the sideways, and even on the falling, because even on the falling market there are periods of bounce off and reverts. So it moves sideways, sorry, not sideways, but it swings, and by that it creates these constant market opportunities for the bot to buy low and sell high. So you see, same example, not the same example, but the same logic. If you would have bought the quantum at that point, where I'm pointing my laser right now, down to that point, you would be in the negative investment change. So you would have a minus 6.88% of a loss. Whereas with automation, your investment change is only minus 3.18%. And that's because the bot profit generated during this period offsets the negative value change of the quantum. Because the quantum value was depreciating, but the bot was making profits, this profit offsets this negative value change of quantum, and that's why the automated algorithm at Bitsgap automatically minimizes your losses in case if the market falls. Regarding the exit strategies, so basically that's the last topic of today's webcast. As we now have all of the optimal strategies, we have the channel up pattern, we have a triangle symmetrical pattern, we have angled up support, and we have a channel pattern on a sideways market. Now is the time to understand what are the exit strategies, and we have 5 of them. So the first one is actually a break even. So the idea of break even is that, let's say you now have a loss of 0.92%. So that's Cardano trading to USDT, and your loss is minus 1%. What if you don't want to have this negative value? The option here is to exit from the market with a 0 return. Alright, so you don't have a loss nor the profit. That's a 0 sum. So that can be the case, and that's known as a break-even exit. So the system in this case automatically calculates the price which the market should reach so that your investment change from 0.92 of negative value becomes just 0. And here it is. For Cardano trading to USDT, this price is 0.1275, where you see this yellow line. So as soon as the price from that point reaches this level, the system will automatically sell all of the base currency, and by that you will have a 0% of return. So that's the way of how you can exit from the market. If you see that it is falling and you know that it will probably retrace a bit, but still it will continue a downside momentum. But that's why you can use this break-even strategy to at least exit from the market with a 0%. Another example is, let's say you want to have a stop loss. So I already mentioned examples where you have stop loss, like in case of the channel up pattern, and I think that was a triangle symmetrical top. That was the third strategy that I provided you with. So the stop loss is basically the order at which the algorithm will sell all of the base currency if it falls to that point. And you can actually assign this level at the time of launching the bot, or you can do this later. So you see the stop loss over here, you can plot it right now. And in case if you forgot, or maybe you didn't have enough time, later you can still do that. If you click on view, you have the stop loss, now you can plot it. And remember that the stop loss can only be set below of the global limit price of your trading configuration. But as we are about to launch Bitsgap version 2, we're going to have a big update very soon. You will be able to plot the stop loss within the trading range, but not higher of the current price. So you see now it can only be plotted below of the limit price, but with an update you will be able to have your stop loss somewhere over here, but just make sure that it is below of the current market price. So let's move on. You see the stop loss, it will be over here. If the price reaches it, then it will automatically sell the base currency, and by that you secure your investment. So you have a full control of your risk. That's what traders must have as a first priority when it comes to trading. Because trading is not about being successful at guessing the market direction. It is about being successful at diversifying your investment capital and being able to control the risk. All right. So sources of trade ideas. Well, actually, I forgot to mention some other exit strategies that we have, and they are over here. If you click on close, well, you see the break-even that I already explained. The next one is to sell at the market price. So if you press this one, at current price, it will sell all of the base currency, and that's exactly 201 theta for my example. Then that's the 100% exit from the market. But if you use this option, which is cancel all open orders, in this case the algorithm will just cancel out all of the buy and sell limit orders, but what is left in open orders, like base currency and quote currency, will be demonstrated on your balance. So you will not get rid of theta in this case. But if you would sell it with the current market price, that's a 100% exit. So be very attentive when it comes to exit strategies, because the first one is it just cancels all open orders. It doesn't sell the base currency. Whereas with the option of sell at the market price and break even, it will sell the base currency. And the last option is a trade profit. That's the positive one, because as soon as the investment change reaches a defined percentage, let's say 7%, So you see right now I have BNB trading to Bitcoin and my investment change is 0.05%. As soon as it reaches 7%, let's actually have it here, 7%, save changes, the system will automatically close the bot. So it will sell all of the base currency. And that's the final exit strategy that we have at Bitsgap as of today. And we are actually working on some other instruments, so that's why it is very important to attend the webcast and to follow the blog and to be fully aware of all of the updates. Sources of trade ideas, recommended strategies, and backtesting. So you see backtesting, you will find it over here. As soon as you selected the cryptocurrency pair, and that's BNB to Bitcoin in my case, show backtesting results, and you can actually backtest what would be the return, let's say from the 1st of October until today. So that's going to be exactly 7 days. You see the return will be only 0.73%. Maybe BNB is not an option for us. Maybe we should look for another one. Let's say FTM trading to USDT, show backtesting, and the same period. Well, you see, comparing with BNB, it would have made 2.23%. So that's the way of how you can use backtesting to find those optimal cryptocurrencies to trade. All right. So basically, you use statistical data to at least build some expectations of what can be a future return. It doesn't mean if the within this past 8 days period the profit was 2.23%, it doesn't mean that within future 8 days starting from today the profit will be the same. No, but at least we can use these metrics as future projections. All right, and here are all of my real cases. You see some open trades for 42 days, some already half a year. All right, so you see the performance. And if you calculate this in annualized return, then that's going to be even higher. So in a long-term perspective, automation can be an optimal solution for your trading doctrine, all right? And with features like demo mode, virtual money that I have here, before risking any real capital on your real accounts, you can test all of the trading configurations. You can test those that I provided you with today, these 5 optimal strategies. You can use your own to discover and develop optimal trading configurations. So you can play with the trading range, with the upper limit and lower limit price, and you can use other patterns from the technical analysis to apply all of these optimal configurations. So I guess that's it for today, and we've actually gone through all of the ungendered topics that I pointed out at the beginning of today's webcast. So let's see if you have some interesting questions, because at the very end of each webcast I am looking for top interesting questions to answer. Yeah, so all right, so far so good. The only question is that what is going to happen with the stop loss if you have a trailing up feature on. So as you know, when you have a trailing up instrument on, that means that your trading range is going to follow the market rally. And same applies to the stop loss. It will move together with a trading range. So if initially your stop loss was here and the trading range was here, and then later as the market moved higher, your trading range is somewhere over here, in this case your stop loss is going to be exactly here. So that's the idea of trading up. If you have stop loss opted with the trading up, then they will move together in tandem. So that's the idea. So yeah, thanks a lot for your attention. I appreciate your feedback. Please. Well, Jack Williams has an interesting question about the fees calculation. Well, in the show backtesting results, the only thing taken into account, it's actually explained over here. So it only backtests based on the bot profit it would have generated. And yes, it takes into account the fees, because you see it has clearly the information about the completed orders during this period, and you see fees. So they are already calculated. So in backtesting, the bot profit is already net of all fees. That's your pure profit in this case, which goes straight to your pocket. Fees taken into account, and even in your active bots, if you click on view, you can find all of the completed orders, the exact amount it purchased, at the price at which it purchased, and the fees it paid, and the total profit generated at that date, at that point it sold the price or purchased the base currency. So all information is provided here. Yeah. So I hope you now understand. Okay, great. So yeah, once again, thanks. Appreciate your time. Please rate this webcast from the scale of 1 to 10. So that's going to be a feedback for me to take into account to make future webcasts even better. And you can, if you have some questions, then you can ask them in our community. You can use this one on the main page. That's the support button, and you can join the Telegram chat where you have an access to the community of beginner traders, professional fund managers. So at least some will gladly provide you with their experience, their thoughts, and as well as our support teammates, they will also provide you with a profound answer. So once again, thanks, appreciate, and I wish you a profitable week. I wish you to stay safe during these hard times of COVID-19. So yeah, see you next Thursday.